3 exams today, I have 2 exams tomorrow, and then I'm starting the next cycle of exams in around 10th of July. I'll have 1 exam 6th of July, 10th of July, and 14th of July. At least those 3 exams I'll have time to prepare for, but the ones for today and tomorrow, it's a hell. It's really tough. Well, I'm done with my 3 exams today. I need to relax. Tomorrow I will be done with most of them as well, hopefully. So yeah. So guys, first of all, tomorrow I'm doing this success webinar. It will be on how to trade climactic reversals or parabolic reversals. That's how we love to call them. I'll be going also through this in that reversal. This is a trade a BBT member shared with us. He emailed me with this trade. I'm not going to mention his name. We will just go through this one quickly, and I'll tell you how I usually avoid these trades, because these type of trades are the ones which are getting me, or which used to get me to max loss after I'm taking them. Parabolic reversals are amazing. It's good to see the stock extended from the 9 on the 5, starts setting up or showing some reversal candles. You take it to the short side and then you just wait for your target. But sometimes something horrible happens in these type of setups. It's wedging. When the stock does just a new fake high, then it's giving you the confirmation candle, a new low. You assume that this was a fake breakout, and then it just gets you stopped out one more time. You re-enter one more time after a reverse hammer or a shooting star on the 1 minute chart or on the 2 minute chart, and what happens? A new high with only 1 cent above it. What happens after that? Same thing. You take it on a new low and it gives you 1 cent high. You take it one more time to the short side and it's getting you stopped out one more time. This is horrible. I hate that when that happens. How can I anticipate these type of moves? I can anticipate it by reading what happened before right there. I see that this is not literally parabolic and going straight up, something like that or something like that. It's starting to curl. It's starting to do something like this. And I might try the first short right here. This trade which our BBT member took right there, when it was extended, when it was making, look at this, higher low and higher highs, higher low and higher highs. It was clearly uptrending, right? Then at the high, it's giving you a shooting star right there. Even if I zoom it and put it like this will look really good. You see this, like it's trending clearly, really nice, a reverse hammer or a shooting star at the high of the day, and then a new high, a new low. This is not bad. But once I get stopped out, just combine this price action with what's happening right here, I'll just avoid it. Even if it works out after that, I'm simply avoiding this trade. When am I going to take this thing to the short side or get to the short side in these type of setups? I want to see that the wedge is literally broken. And when will that happen? You could draw the range of this wedge, something like this, and you want to see it broken, not only wick down. You just simply want to see it broken and it closed. Once you see that the wedge has broken, the red candle has closed, you are not taking it to the short side on the next candle, because now the risk to reward is horrible. You are taking it to the short side here, your stop loss is above that candle, so basically it's almost full candle like that. It's really wide. I'm going to see what it's going to do in the next 2-3 minute candles. If it's showing me that yes, it's weak, the wedge are already broken, and now it's going to start making lows, or at least it's holding a new resistance area, that's when I'm going to give it the second attempt to take it to the short side. If the stock is doing this, don't try to get your money back out of it. This is a disaster. This is how to get your max loss trading one stock, and I've been there a lot of times. I learned my lesson, and I don't want you to get into that. If the stock is wedging, just avoid it. These type of setups, they either work out immediately, or they form some sort of setup, let's say double top on the 1 minute chart or on the 2 minute chart, and then they work out. Just one pullback and then they work out. If you are really patient and you don't want to partial earlier, you want to hold to your max loss, you'll get stopped out once and then just wait for another setup or a re-entry. But don't try to just trade it a lot of times somewhere there in between. Okay, and now let's go. So Lenny sent this chart for us right here, and let's see, Lenny. You sent me another picture, I guess. Let me actually download it from the email. Lenny, where are you? Let me download this one. So Lenny wanted to analyze the volume on WKHS right here, and he wanted to just analyze the volume and how do I interpret the volume along with the price action. First of all, this volume, the increasing volume right here, I usually don't give it much attention. It is important to read it, it is important to notice what it's doing, but this is the opening volume. There is a lot of buying and selling happening right at the open. It could be either investors, people who really swung it, people who traded in the pre-market. You can't really interpret the opening volume price. A lot of buying, a lot of selling, some of it for people who want to hold intraday, some of it for people who want to simply swing it or invest it, some of it for people who already were swinging it or holding it, or maybe took their position somewhere in the pre-market. So it's really tough to interpret this volume. We don't know what it's going to do, but I could see that it's actually is increased closer to the high of the day. Now look at this, it's starting to drop down or pull back or doing something like that, and the volume is decreased right here. Why is it decreased right here? I would call that this is the accumulation phase. This is where people are getting either to the long side, either to the short side, wherever they believe it will go, looking at the daily chart, looking at the pre-market, looking at how it's traded intraday. I am definitely going to be long bias on it, and maybe just people getting in small inside there for a trend trade, right? You don't go really heavy in range, you just go small, and once you get your confirmation breakout, you could increase your share size. Now look at this, volume starts to increase again closer to the high of the day and the high of the pre-market. It's getting increased right here. But what's happening? The first candle is wide bar, right? Wide bar with an increased candle. Then the rest of the candles after that, let me just zoom the 1 minute chart. The rest of the candles after that, the body is getting smaller and smaller and tighter. You see that it's not really strong. It can't really break out. It's trying. The volume is increasing. There is a lot of action happening right here. Looking at the daily chart, looking at how it performed intraday. This might be indicating breakout, but I definitely don't like how those candles look like. If it was strong, it should have just simply made wide bar candles. It should have broken, it should have went up, but there is also some selling happening right here. That's why the volume is increasing right there. One more thing, look at this. You could see that this was around 10:05 or 10:10, right? The increasing volume. Let's look at the 5 minute chart and how that looks like on the 5 minute chart. On the 5 minute chart, see this is it right here. It's starting to increase once it formed a new 5 minute high. So basically, people who are long biased, once they are seeing that the pattern is breaking out, maybe an ABCD pattern, maybe a breakout area, maybe an attempt for the break of the high of the day on a new 5 minute high, they are getting into the long side, and that's why this volume was increased on the first candle right here, the white bar, once it formed the new 5 minute high. After that, it's failing to break the high of the day. The volume here, you could see that it's slightly increasing, right? It's not so increased, but in compared to the accumulation phase right there, this volume is way bigger. Why is that? Maybe people are simply bailing on their position after it failed. If I was long right there, or I was long right here, and I see that it's breaking the high of the day by a few pennies or 50 cents or 30 cents, forming a doji at the high of the day and then a new low, I would just simply start bailing out on my position or just decrease my share size. After that, same thing, double top, it's just starting to fail, volume is low because the price action is horrible, right? This is where the volume started increasing because this is where the action was supposed to happen, or at least it looked that it was going to happen. A beginning of a new move, maybe beginning of the trend, but nothing happened there. People started bailing in and it just started consolidating on a low volume right here. Why is the volume increased on this candle right here? You could see that the pattern has failed, double top, sort of a descending triangle forming again. You could see that this moving average was holding the price action all the way up, and now it's breaking this moving average, and I would simply assume that this volume is increasing because people are just bailing on their position. Is the accumulation phase the volume should be high or not? No, Lenny, in the accumulation phase, the volume is small. The volume starts increasing after the stock breaks out of the range or starts finding the trend. Here, are the smart people getting in. Stock is consolidating in a range. It's as close as possible to the support. You try to interpret the details, try to interpret the daily chart, the bigger time frames, try to read where it is going to go, and you get in small right there. Not a lot of people are getting in a range. People getting FOMO when the move starts to begin, when the move is breaking out. They see that the stock was consolidating for around an hour or 2 hours. Now it's breaking out. They don't want to miss the move, and they are starting to get in on the way up. That's why the volume starts increasing after the accumulation phase. In the accumulation phase, it's small. On the way up or at the breakout area, it's starting to increase, and the higher it goes, I would assume that the lower the volume will go, because less people will be going in. If there is a huge volume at the high of the day, I would assume that this is a lot of people are getting out of this stock and maybe getting in some chasers there. It's a climactic volume where a lot of dumping happening, and it's the end of the move. Nothing of that happened right here, but this is just a quick analysis of what I see happened right there. Would I trade this stock? Not really. Right after this price action right here, I would just simply avoid it. I was one of the traders who bought the breakout and bailed when I saw the weakness. Yeah, you see, this is even what I just said right here, and Ivan just said it. He went in at the breakout, right? But then he saw that the weakness started to happen right there, and there it started to fail, and that's why Ivan just bailed on his position. And that's what I would have done, and that's what I believe a lot of other day traders did right there. Yeleni, this volume right here at 1772, it's exactly what happened right here. 1772, you see these candles right here? They are holding it, then you're having a new 5-minute high happening, a breakout, and the volume increases. Perfect, so now let's go to the trades. This is Lenny's trade on WKHS. See that you try to get into the long side right at the open, right? Here at the open, it opened up strong, pulled back, sort of an ABCD pattern on the 1-minute chart, but look at the 5-minute chart. Remember, we were talking about this like almost on all the trade reviews. Seeing an ABCD pattern on the 1-minute chart when the stock is really extended from the 9-moving average on the 5-minute chart isn't the best pattern. You want to get into an ABCD pattern which is forming as close as possible to the support. You don't want to get in at the breakout when the stock is really extended. You're having a daily level which you're getting into. You're having a pre-market high which you're getting into. The stock already did a huge move right there, $2 or maybe $2.50. Yeah, $2 and something. And it's way extended right there. It's an ABCD pattern on the 1-minute chart, but on the 5-minute chart, it looks like a chase. If this happened somewhere right here, let's assume, somewhere right here, it would be an ABCD pattern on the 1-minute chart along with a 5-minute open range breakout on the 5-minute chart. It's close to view up, it's not extended yet. This would not be a bad setup, but right here it was just a little bit late for an entry. I see this is a resistance right here, but still, overall, it was just a little bit extended, right? Yeah, you can't get in below. I agree with you. Maybe you could have got in right here. This would just make a little bit of sense. Why is that? The stock is strong. The stock was uptrending in the pre-market after the pullback right there. At the open, it sold off. It made a new 1-minute low, fake 1-minute open range breakdown, and immediately squeezed back up, forming an engulfing. Then it's breaking above it, right? This is an engulfing, cracks it up. So this wouldn't have been a bad place to enter and put your stop loss somewhere down there or half of the candle if you're going for a momentum play. Somewhere right here is just a little bit late to get into a trade. Right here, there is no entry. So yes, this wasn't perfect. It would have been possible to enter right here. Definitely not here. I don't like it. But I can't see any other possible entry. But remember, if there is no entry, there is no good entry to a stock, and you think that there was no entry before and this is not a perfect entry, just avoid trading this stock and watch something else. You don't need to get into a trade. You don't need to get into a move if it's not good, right? Just wait for the perfect opportunity and then get into it. I like the stop loss. The stop loss was totally technical. It was the low of the consolidation area or the C area if you take it for an ABCD pattern. It's really smart for you to have a stop loss right there, but it wasn't perfect in the 5-minute chart, and the risk to reward would have been so bad, right? If this is your risk, you would need around, what's that? If that was around $1 stop loss, you'd need around $2 move to get 2 to 1. Let's see, I know. And I see what's the mistake here. Anyone, guys? It was a good trade, and I like that you were long biased on it. It was just a little bit earlier to get an entry to the long side. Could you see what wrong you did there? It is an open range breakout in the 5-minute chart. I like it. But one thing you did, one thing you did is that you got in on the way down. We try to avoid getting into the long side on the way down. There is no confirmation in the 1-minute chart, but here you have a confirmation. You're having an ABCD pattern on the 1-minute chart along with an opinion range breakout on a bigger time frame. This is one of the A+ setups. Along with that, it started to hold view up. It started to hold the moving average right here. It's close to view up. It's not so extended. Yes, this move was huge, but at least you had around 40% pullback right here, right? So you're having 40% pullback. You are having an ABCD pattern in the 1-minute chart. You are having a 3-bar setup on the 5-minute chart along with the 5-minute open range breakout, and it's close to view up. This wasn't bad. The second best thing right here is that you are having room. You are having the daily level right here. You are having the moving average right there, daily level on the 5-minute chart. There is not much resistance on your way. So if you get in at a new 1-minute high there or a new 1-minute high right there, which I would love way more because you'll have an ABCD pattern along with a W setup right there, and then a breakout, and your stop loss would be the low of the previous wave right there. You'll still have a risk to reward to the daily level. Getting in right there or right there is just a little bit late because your stop loss will be a little bit far and you're having a resistance right above your head where you would really need to take some partials. So it's good that you saw it to the long side, but it was a little bit early, and I would have re-entered right here or right there if I missed this trade. But good job respecting your stop losses. Hey man, can you tell how many minutes you set your charts to look back on the 1 and the 5-minute charts? I'm currently looking at about 45 on the one. I think it's too much. To be honest, I have them. I don't have any particular time I want to look at. I just simply keep them zoomed out. Sometimes I even do like this just to see the general picture. The 1-minute chart is zoomed in. It's a lot zoomed in most of the time for me because I want to get really good entries with tight stop losses, and I want to see where I'm double clicking at and where the current price is right now. If I have the 1-minute chart so zoomed out, I might just mess up my risk to reward. It might be not technical. It might be a little bit above the stop loss where I want to put it, and it could be a little bit below. So the 1-minute chart is usually zoomed in. I try to look at the 5-minute chart and the price action there, and I try to get my entries on the 1-minute chart. And because I'm basing my entries of the 1-minute chart, I need it to be zoomed in. J-Bone, let's see what you did there. So J-Bone traded GPS, and this was perfect. I love it actually. Look at these guys. You took it for an ABCD type C. It was after an ABC. It was first short, right? And then you took it to the long side for an ABCD pattern. Let's go through both of the trades. First of all, to the short side. Stock extended from the 9-moving average on the 5-minute chart. Right? This is the 5-minute chart. It's extended from the 9-moving average on the 5-minute chart. It has a daily level above it right there. This is good. Now let's go to the smaller time frames. The 1-minute chart and the 2-minute chart. On the 1-minute chart, we're having tweezer, which is an engulfing candle, a white candle and then a red candle. And on the 2-minute chart, you're having a shooting star or a wick above it right there. You take it to the short side on your low. What's the stop loss right here? never using the high of the week. It's the high of the previous candle or the body. In this case, the high of the previous candle seems to be so good as it coincides with the daily level, and just to give it some room right there, this is the risk. And what's your target? The target is usually the 9 moving average on the 5-minute chart. I see that you partialed a little bit there. I think you hit your risk to reward, but eventually it did get to the 9 moving average on the 5-minute chart. After that, what happened right there? Stock is making a move from A to B, a pullback to the 9 moving average on the 5-minute chart. You are waiting for the W shape to take to the long side, and you are taking it to the long side. This is perfect. One thing though, in this case, I wouldn't have traded the ABCD pattern of the 9 moving average on the 5-minute chart. I would have waited for maybe the 20 or the 15 for one reason. The pullback wasn't big. You see this move right here and then this pullback. This pullback isn't even 30%. On ABCD patterns, I want the pullback to be 50% in average. I mean 40, 50 in average, but it's good to have it even more more than that, 60 to 70. So somewhere in that range, 40, 50 to 60, 70 pullback, that's good. If it's only small pullback, I don't want to take these type of ABCD patterns. So I see that you waited for a pullback to the 9, which was nice. You waited for a W shape, which was good. You got a really good entry, stop loss at the low, and you respected the stop loss. This was perfect. This was the first type of ABCD patterns where it looks like a ladder going sideways, new high, which is the entry. This is the third type where the pullback is parabolic, but the pullback was small right here, which is why I wouldn't have taken this type of ABCD patterns to the long side. Now the drop right here is looking decent. Right here it's also looking decent, but I would need to wait for a W shape, which didn't happen. Otherwise, I mean, other than that, this wasn't bad. It wasn't perfect because the pullback wasn't enough, but it was good. Strong on the day, maybe too strong, was up over 30%. So W pattern on the 2-minute chart, and the 9 moving average on the 5-minute chart, and the 50 on the 1-minute chart, which is the W. Entering new 1-minute high, stop below the consolidation at view up. Risk to reward, wanted to get 3 to 1, but lost 1 R. It wasn't bad to think about for long, but as mentioned, the pullback wasn't enough. Now let's see what you did right there. You traded ABCD pattern type B, and guys, what's the type B of ABCD pattern? The type 1, for those who are not familiar, it's looking like stairs. It's consolidating all the way till it hits the 9 and then it shoots up. Type 2 is an ABCD pattern, also like a ladder, but the pullback is a little bit bigger. It's not straight. There is a pullback something like that, and then a new high, and it's shooting to the up. This is the 9 moving average, let's say. But this pullback showing you strength. It's showing you that it's not so weak. The third type of ABCD patterns is where it actually drops strongly. This is showing you that it's weak, and you don't get in at the first breakout. You wait for a W shape before you take it to the long side. On type 1 and type 2, you don't really need to wait for a W shape. You just get in on the new high. You get in on the new high. And on type 3, you wait for a W shape right there. Now, why did he take it to the long side? It gapped up on the daily chart, so he was long biased. SPY was also strong, which is why he took it to the long side. It was curling price action on the 1-minute chart. This is the curling price action. We'll zoom it in and we'll talk about it right now. Entry, waited for the doji to close, and then he took a new 1-minute high. Stop loss was a new 1-minute low. Wanted to get 3 to 1 R, but got 4 to 1. Good job, J-Bone. That was really good patience right there. So let's go through the 5-minute chart first, okay? Stock is going up. This is actually looking like a reverse ABCD pattern in the pre-market. Now, first of all, this was an ABCD pattern. Right there, you're having the W shape right here. Wasn't a bad entry right there. It's breaking up, but it's failing. It's not even making it to the high of the day, and then it's starting to drop. So now it actually started forming a reverse ABCD pattern. What I don't like about this reverse ABCD pattern is that after it broke the low of the day, it didn't continue downtrending, and it didn't even get to the pre-market low. So it was actually strong, and it immediately got bought back up. It started forming a 3-bar setup to the long side on the 5-minute chart. On the 1-minute chart and the 2-minute chart, it formed an ABCD pattern, which was the type 2. Not a strong pullback, just going sideways. Took it to the long side on a new 2-minute high after a doji. Stop loss at the low of the consolidation, and got 4 Rs right there. So yeah, this was good one, J-Bone, and you made the losses from the previous trade. This is why risk to reward really matters. You hold on to your winners and you try to cut your losers fast. Okay, let's see what you did here on AAL. Was this a long or short right here? I assume this was a long because there is no reason to take it to the short side right there. It was a 1 minute open range breakout. It was at the break of view up, getting into a level which is not really great right there, right? But this daily level, I see that it was not respected, so I wouldn't really pay much attention to it. So yeah, I mean, for a 1 minute open range breakout, this wasn't bad, but the entry was a little bit late. I would just take it to the long side. If I was a long bias and I would want to take it to the long side, I would take it immediately on a new 1 minute high. And what's my stop loss? The low of the week, because at this moment it was red, right? It was red, but it got bought back up for a new 1 minute high. First 1 minute or 1 minute open range breakout, it's still a momentum play. You take it to the long side, you put your stop loss down there, and you just go for the risk to reward. This entry was a little bit late, right? Using stop loss as using view up as stop loss right here wasn't the best idea. Why is that? Because view up isn't respected. It broke it right there, it broke it right here so fast, it went down at the beginning. So view up isn't the best stop loss right here. The low of this candle was smart. Why is that? I mean, what's the second thing right there? The second thing is that the moment you got stopped out, you got stopped out within the same candle, right? So it went down, it came back up right there, it came back down. You could expect the candle to just go up and down right before it closes. So you can't put the stop loss within the candle which is not even closed. If you take it to the long side right here and decide to put your stop loss below the body, at least that would be good. You see that the candle is already closed, and if it's making a new 1 minute low, most likely it is going to drop right there. But before the candle close, you can't just tighten the stop loss. Now this was a little bit of a chase. On AAL, 30 cents, 40 cents move, especially on the days when it's not in play, is a little bit big. This stock doesn't move a lot. Stop loss of even 1 or 2 cents if you get it at technical level is not bad, because it just doesn't get you squeezed. It moves so little, the risk is really manageable on this one. You can control even 2 or 3 cent stop losses on these type of stocks. So I wouldn't really give it so much room right there. And I see that you got stopped out one more time because the stop loss was so tight. It was again within the same 1 minute candle. So looking at this, my advice is to put your stop loss, if you want to really go tight on them, at least the low of the previous candle. I mean, minimum we could do is a new 1 minute low for our stop loss. You can't put it within the 1 minute candle, and we can't put it within the candle which is still open. That's like so tight. I wouldn't put it within the 1 minute candle right here if I take it to the long side, and I wouldn't put it within the candle which is moving right there. It's at least the low of the body. Though looking at that, the risk to reward will be not really good right there. So I'm not sure I would have taken it right there. And let's see what happened after that. You tried to take it to the short side below view up. I see that. And again, this is just a little bit late. I see that your confirmation was a break of view up. Maybe you went for a view up breakout setup right here, but this is not view up breakout setup right here. It's not respecting view up. You just look at that, right? You see that it's not respecting it. It's not respecting it. So view up doesn't play or isn't playing a huge role right there. The risk to reward is also messed up at this entry. If you take it to the short side here, your stop loss can't be within the 1 minute candle. It should be at least new 1 minute high or new 1 minute low. This is your risk. And what's your reward? I mean, even if it gets to the low of the day, though I wouldn't really hope for it, because I see that the 50 moving average right here is actually respected. It bounced out of it one time, maybe it bounced out of it a little bit, a few times right there. Here it did break above it, but it could just simply hold it one more time, and you could see it actually respected it right here. So this moving average is good to play off. I wouldn't have taken it to the short side because the risk to reward is simply not there. For now at least, okay? And then you get some of that. If you got an entry right here with the stop loss right here or above the wick, you would get the risk to reward. At least there is some room to the moving average, which is respected. I wouldn't care about the view up because it's not respected. I wouldn't care about the non-moving average in the 1 minute chart because it's almost nothing most of the time. The 20 maybe a little bit to be concerned about, and the 50 in this case, yes. And after that, it just did whatever it did. Short. Oh, it was a rising devil right here. Short. The pre-market was weak and then high move up. Okay, so all of this time you were trying to go short. Okay, so look at this. First of all, this was a rising devil for you. I wouldn't go for a rising devil. What's a rising devil? You need to have a stock which is actually not bad for a rising devil right here. Yeah, I mean, it wasn't bad for a rising devil right here. But if it was within this candle, on this candle, once it just closed as a huge full engulfing body. It was a little bit risky to take it, but still, I mean, it wasn't bad. If you took it to the short side for a rising level, this is not bad. Stop loss was so wide, you would put it at least on a new 1 minute high right there for a rising level of view up, or maybe you got some slippage right there. Now I wouldn't take it to the short side on those candles. Why? Making higher highs and higher lows. You don't go long short on the way up, and you don't go long on the way down. Here you try to take it to the short side, which was smart, at least on the way down, but a little bit of a late entry right there, and eventually it did work out to the direction which you wanted to have it to. But look, if you took this one losing trade, fine, you take it one more time to the short side on a new low, you would get a profitable trade right here, at least 1 hour. You'll lock in and the rest you exited break even. You see that there is selling pressure right here. Double top with second top lower than the first one. New 1 minute low, you take it one more time to the short side, and then it just works out. Don't try to catch it to the short side on the way up, because this, you don't know how big the pullback is going to be or how far it's going to go. You don't even know if it's going to drop out eventually, right? That's why we need to wait for confirmations before we get into a trade. Yeah, perfect, Nick. Ramlan, let's see what you did right there. It was zoom, you took it, and I assume this was for sort of parabolic reversal because the 9-moving average was far. It went up. I wouldn't have taken it to the short side because this candle would have been concerning, would have concerned me a little bit on the 5-minute chart. On the 1-minute chart, it's actually not so bad. You see sort of an ABCD pattern on the 1-minute chart. It's breaking the high of the day, but this is a fake breakout. It's breaking it, but it doesn't move a lot, and this is why I don't take these type of ABCD patterns to the long side. And it's because sometimes they do break out, sometimes they don't break out, but sometimes they do break out. And my biggest concern is how far are they going to go after they break out. Okay, it broke out, that's good, but will it get to my risk to reward? Will it get to 255.50? Will it go to 256? I'm not sure because it already did a huge move and I need to expect a pullback at any time. The question is when that pullback is going to happen. So I don't like taking ABCD patterns when the stock is extended, and this is what happened right here. It did break out, but it didn't run a lot. A doji at the half of the day, extended from the 9 and the 5, you take it to the short side, early partial, right? This should be your stop loss at least, the high of the body, good entry, and then just go for the risk to reward, at least a 2 to 1. This partial was decent, at least you got in, out, or you got out at the risk to reward. I'm not sure if this is a daily level. I think this is a daily level right here, or it's a moving average. Could be a daily level, I guess. But yeah, the second partial was good. Hey, I'm from India. The difference is in India the pre-market is only 7 minutes. 7 minutes the pre-market? Are you trading the local Indian market? Are you focusing only on pre-market? No, Abhishek, I'm not focusing only on the pre-market. We are focusing on the daily charts, on moving average, the volume, the price action, and then we try to combine all that together and just choose the direction where we want to go to. So let's see what you did here, Daniel. You traded WFC and you tried to get into the long side. ABCD pattern, I assume. Now looking at this, stock opened so strong right there. Pulled back, sort of wicks, small wicks right there. A hammer on the 2-minute chart. You take it to the long side and you immediately get stopped out after that. On the 1-minute chart, small W shape right there. After a huge drop like this would be concerning, but I don't see any mistake right there. It's not bad. Definitely not an A+ setup, not perfect setup, but I could see that it's actually respecting the moving average. I see the wicks on the bottom right there. I see a doji on the 5-minute chart. It's a little bit scary after a huge drop like that, but it wasn't bad. I mean, you tried to take it to the long side, your stop loss was technical, it got you stopped out, it's totally fine. Not perfect, but not bad as well. your second trade on beyond, and you try to get into this one to the short side. This I would have been a little bit careful about. You see that it's starting to form higher lows. Yes, it was weak right there, right? It's forming sort of a W shape right there. First of all, it tried to make small reverse ABCD pattern on the 1 minute chart, and then it just made it all the way back. Now it's trying to come back up, pulling up, coming back. It's just a little bit tough. You're having a bearish engulfing sandwich, which is a long or a bullish pattern. No new 5 minute low yet, right? It's around 10:15 or 10:20, somewhere right there. No new 5 minute low. You have a hammer at the low right there, which is also bullish right there. It's ascending around view up. I would have been a little bit careful about taking it to the short side. It's not looking bad on the 1 minute chart because you're having an M shape right there after a descending triangle, but you could see that it wasn't something like that. It wasn't just dropping down, then a pullback to view up, then a drop down, then lower high, and then it working out. It actually started trending to the other direction. It dropped down, came back up, pulled back, came back up, pulled back, small reverse ABCD pattern, and came back up. You see, it's just waving to the upside, forming an ascending triangle along below view up. It would have looked a little bit better if it formed a new 5 minute low right there. Yeah, Daniel, on WFC, the biggest thing which would have concerned me is the huge drop right there. It just eliminated the whole move. Let's see your Uber trade, Mick. This is not bad. And what's making it not bad is this wick right here. So the stock went up, pulled back. At the open, it opened up so weak, dropped and broke all the moving averages, broke view up, broke all the levels, but it immediately gets bought back up and squeezed above view up. Then it starts consolidating and chopping around view up. You see that there is more buying wicks down there, which is showing you a little bit of strength. You're taking it to the long side as close as possible to the support or to the consolidation area, and you're taking your partials all the way up. This is not perfect setup, not so clean, because I mean, look at this. It's just forming a double top with the second top lower than the first one. I like that it got bought back up. It formed two dojis, new high, which is good to the long side, but I would be afraid that it will form a lower high and again drop down. And you could see that it wasn't so clear after that, right? It did go all the way to the daily level and then it just simply dropped back down. Wasn't a bad step, it was good. It was decent and it worked out. Not an A+, but at least most of the indicators showed you strength right there. Now, I wouldn't have taken it to the short side here. Why is that? I think you took it to the short side because you assumed that it was forming sort of a descending triangle right there or a breakout of a level. But look at this, the gap. Remember when we said that if we want to take setups for the breaks of the descending triangle and ascending triangle, the pre-market high, I don't know, daily level or whatever, you want to take it when the range is getting so tight. You don't want to take the break when there is a wide range. So you want stock to continue consolidating. You want the range to get tighter and tighter and tighter and tighter and tighter until it has nothing to do but to explode either to the upper side or to the downside. And if it's exploding to the downside, you're just taking it to the short side. That didn't happen here. You see the range is a little bit wide. It didn't just get so tight. It's tight on the 1 minute chart. I mean, it wasn't tight in the 1 minute chart here. It was tight in the 1 minute chart here because even here when you took it to the short side, the range was still a little bit wide right here, right? You can't put stop loss at a new 1 minute high. The next thing is if you put your stop loss this wide right here, it will not give you 2 hours to the low of the day. You see that this level bounced off. So if it's giving you a setup to the short side right here with the technical stop loss right there, the risk to reward isn't there. So I personally avoid this trade right here. This is giving you a tight range right here, but it's extended or far from the 9 moving average in the 5 minute chart, and I would expect to just continue consolidating till the 9 moving average gets lower and it starts forming a tight range. So I wouldn't have traded it to the long side there, to the short side, sorry. The long side wasn't bad because, as we said, the range was not tight and it could just simply go to any of the direction. It has room to the upside all the way here, and if it breaks up, then it's a bonus. You can make more money, and if it pulls or bounces of that moving average and starts going down, forming a tighter range, you could always exit at break even. So this trade wasn't bad. It was good from you to read the price action. This was also not bad. You read it nicely, but this was a little bit tough. This wasn't bad trade. This was a little bit tough and concerning. This was actually good. I like it. This here, I would just lay my hands off and wait till it gives a little bit of some extra confirmations. Why the volume was low right here? Because it was accumulating. It wasn't descending, right? It wasn't breaking down. When you took it down here to the short side for the breakdown on this one, yeah, I can't really tell why it was low. It wasn't really low. I mean, it was in average or the same volume right there. Intraday, you could see that this candle right here, let me see. This candle right here, it was also huge, but the volume was low, right? Huge candles that don't necessarily mean big volume. You could have a huge move in one candle with low volume if most of the volume right here is buying. You get it? If most of the volume is buying, if there is buying and selling within the 1 minute candle, like a lot of buying and selling, which is holding the price not to go up and not to go down, you could have a really small candle with a really huge volume. So yeah, the amount of volume doesn't necessarily mean define the look of the candle. That could be too low. The opening bar is usually so huge. If you look at it this way, it is not bad. Let me see actually. It was increasing. It wasn't really crazy. I mean, you could see there was a smaller bar candle right here with the same amount of volume, right? But again, the amount of volume just doesn't define the size of the candle. It was decent. It wasn't so small. Let's see. Then so Dan traded BE, and I guess this was a parabolic reversal. Was it Dan? Stock is dropping down, right? You see this is a huge drop. It's almost going straight down. Pullback going straight down into a level you had right there. Increasing volume or climactic volume at the low of the day. And look at this. You see this the size of this candle? The size of this candle and the size of this candle. Basically, this candle right here is almost the same size as this candle right here, but the volume is double right there. It's just because of a lot of price action happening right here. Look at this candle right here. Where is it? Where is it? Where is it? I just lost it. I had a candle in my head. There it is right here. You see the size of this candle right here? It's actually this. You see the volume in it right here? And you see the volume in this candle, which is the same size, but it's increasing. It doesn't really define it. It's just the action which is happening within this candle right here. Now it's getting to the low to the level right there. Increasing volume, new 1 minute high or new 2 minute high, which is smart. You're taking it to the long side and then you go for it. I personally wouldn't call this a parabolic reversal. It's just a little bit tough to trade these type of reversals right here. I love trading parabolic reversals when they are going with the trend and then pull back to the moving average. When they are going against and then bouncing, it's possible to trade them, but it's a little bit more difficult for me to catch this type of reversal. It wasn't bad, it was amazing, I love it, because stocks eventually pull back and it's not necessarily going to go to the high of the day. It could just simply form a reverse ABCD pattern, right? It could have done that, it didn't do that, which is a bonus. You get in as close as possible to the support on a new high after a parabolic drop with an increasing volume and a daily level on the way. This was perfect actually. Nitin, we actually trade the US stock market because the US stock market is so volatile. There is a lot of price action happening in there, and it's easier to trade it. It's liquid. We don't usually advise trading the local price, the local markets or CFDs. It's not bad trading them. I'm not saying that you are not going to make money there, but it's easier to trade the US stock market, and that's why we encourage trading the US stock market. I live in Russia and I don't trade the Russian stock market. I looked at it, but no, I doubt I even will trade it. Ivan, let's see what you did there. Can you ignore the INO screenshot? Not trade. Let's see. Okay, ignoring this one. Let's take a look first at this one. So you took this one to the short and it was BA, and I like this one. This was good. You see that the stock is dropping in the pre-market, right? At the open, it sold off a lot. It then got bought back up. You see buying pressure. Along with that, you're seeing selling pressure. A doji as close as possible to the resistance or VO up. It didn't even make a new 5-minute high. It's close to the 9-moving average on the 5-minute chart, close to VO up, making a new low. So you waited for a new low before taking your entry, and then you partialed closer to the bodies, closer to the low of the day, and then just all the way down. A little bit of extra partials, but I would understand why you did that. When you're having really wide candles, you can't just simply hold on to a trade till it makes a new 1-minute high, because this one candle right here could be $2 or $3 or $4. You don't want to leave the stock, let the stock go against you $4 just to exit at a new 1-minute high. If the candles were small like this, small candles, you wouldn't want to just take partials, a lot of partials right here, because the candle is just simply small. You could wait for a new 1-minute low, or you could wait for a huge candle spike at which you could just take some partials. So yes, a lot of partials, but I could understand why you did that. The entry was amazing, really tight stop loss, and I love how much you held for your first target right there. Let's see what you did on WKHS. Partial at Rs. Okay, that's smart. You have your rules, you followed your rules, and you've partialed at Rs. Let's see what you did on WKHS. You see this? This is exactly what we talked about. Stock is just consolidating a new 5-minute high, increasing volume, and that's where Ivan got his entry. Remember guys, we just talked about this right at the beginning. Then it went up, started getting heavy, went into a daily level, and that's where he just went most of his position out, and that's where a lot of other traders started doing the same thing, which is why the stock just started getting heavy. And you can see that it just simply started doing nothing, right? And look at this, he started bailing on it because the price action started looking a little bit irrelevant. You're having a double top, the stock is breaking down, started forming lower high waves. He exited here, some exited maybe on a new 1-minute low, which caused the volume to increase right there. I love how you managed it. I think you had a really tight stop loss because you went in at the breakout area. Good partial at the highs right there. You got the risk to reward because you are partialing at Rs. So yeah, that was a good one. Jen, let's see what you did, Jen. Stop below the 9-moving average on the 1-minute chart. Yeah, the 9 was a little bit tight, but I think if you, yeah, by that moment it was the low of the 1-minute candle. So yeah, it was good. It was really good. So Jen, let's see what you did right there. This was a long, I assume, and this was a long. I like that you got in as close as possible to the support. You didn't get in anywhere right here or right here, but on this candle, getting into the long side at this area, it was just a little bit risky and a little bit early. You see that this engulfing candle, first red candle, then it's just making a new 5-minute high, bullish 1-minute high, and the next candle it gets engulfed, right? So after an engulfing candle, it could have just simply made a new 5-minute low and dumped down right there. It was the support area, but we don't trade only based on the support area. I see that it held this area, this level right here in the pre-market. It closed above this area right here. It held it 2 times, maybe on the 5-minute chart, and then you are getting into the long side. After it's coming back above it, it's breaking it first, then it's coming back above it. You are taking it to the long side and start partialing all the way up. And I bet this returned a really good reward, but it was just a little bit risky. We don't trade based only on daily charts, daily levels. It's not enough, and it could have done anything right there. This here is good, and I like it because at least here you're having a confirmation. First, the stock was descending, right? It was descending above this level, above this level right here, and you are having a selling pressure wick right there. But what's not happening is a break of the descending triangle after this wick. If it broke down right there, this would have been a really good entry to take it to the short side, but it didn't break down. It started squeezing back up, forming a new 5-minute high. You're taking it to the long side, stop loss either down here, and you drew the descending triangle actually, which was really nice. I like how you noticed it. You put your stop loss either at the low of the week or right there, just to give it some room, and then partial all the way up. So this was a really good trade. This was a little bit risky, but you managed it well, and you hold on to your winners. Ralam, let's see what you did there. So you traded INO for a 5-minute open range breakout, and this is basically, we talked about this trade, right? It's a 5-minute open range breakout, but the problem is you took the 5-minute open range breakout on the way down. If you wait for a new high, this would have also still been an open range breakout, but after a confirmation candle right here. Then you are trying to take it for a reversal. This wasn't a bad reversal. You see a daily level right there, or a moving average, selling pressure wick, new 1-minute low. You're taking it to the short side, stop loss somewhere above the levels right there, and eventually it'll get you stopped out, but at least it's better to take it to the short side here than the long side for an ABCD pattern when it is extended. Either way, ABCD pattern and the short would have failed right there. Not bad to re-enter after a double top with the second top lower than the first one below a moving average, but still, this wasn't bad, this was good. This was just early, right? Overtraded, tried to catch a reversal right here. Not a bad reversal. You see it drop down slightly far from the 9 on the 5. You're having a confirmation candle on the 5-minute chart, which is better than having confirmation candle on the 1-minute chart and on the 2-minute chart. Taking it to the long side, early partial. Taking it to the long side, early partial. Just hold on to your winner and wait for your target to get hit right there. But still, good job reading the price action. I mean, eventually the stock did everything you wanted it to do. You wanted to take it to the long side, it was just simply a little bit early, it worked out. You took it to the short side because you believed it's short, it did work out, but the timing wasn't there. You took it to the long side, early partials, but it did work out. Really good reading of the price action, but work on a little bit on your entries right there. Would you take the 1-minute open range breakout? Might have considered taking this for an engulfing crack. 2-minute open range breakout? No, I'm not sure I would have taken it. I was watching, I know, but I didn't take it. I'm not sure I would have taken it as well. It did work out really nicely. This was a short squeeze right there, but it didn't look good to me at the time, so I avoided it. I didn't trade this one actually. I'm actually in a trade right now, and I don't have a hard stop on it, and I wasn't watching the price. Okay, that's good. So I took NK to the short side. Let me just take a partial right here. I took it twice. Let me go through this trade before we're done. NK was on our scanners. I think it either was on our scanners or it was on the RSI extreme scanners. You see it on the 5-minute chart, straightly going up. This is what I mean about parabolic reversal. It's just going up like this, right? And extended from the 9 moving average on the 5-minute chart. I see on the 1-minute chart at the high there is a doji. I take it to the short side, put my stop loss above the wick in this case because there was a little bit of spread and I just couldn't have it tied for 3 or 4 cents or 5 cents when the stop loss is really wide. What I'm doing, I'm taking it to the short side. It's getting me stopped out. I'm totally fine with it. Noticing that, looking at the 2-minute chart, right? On the 1-minute chart, we had fake 1-minute lows. We had a new 1 minute low right here. We had a new 1 minute low right here. We had a new 1 minute low right here. All of them failed, but looking at the 2 minute chart, no new 2 minute low, and this is the first new 2 minute low when it was extended. So I decided to re-enter right here and put my stop loss up there. This was a really wide stop loss, and because of that I didn't take any partial at the low right there because my risk to reward wasn't there. I see that it's making a lower high wave right there. It's starting to work out, didn't fail yet. So I'm adding to my position and I'm not putting my stop loss at the high of the wave right here. I just decided to give it a little bit more room because it could just simply form a double top with the second top lower than the first one. Held it through that and I just waited for it to drop down. Now look at this, the candles are gappy, I don't like that. The volume is dead on this thing. At the open, the volume wasn't like that. The volume was really increasing, but then it just started dying right here. But since I was already in it, I just decided to hold on to it. Took a partial at view up, took another partial right here, didn't care about the consolidation. It's making a new 5 minute high right there, new 15 minute high, and I'm just out of this trade right now. So yeah, that's it guys. What about WKHS? You entered at 1925. Let's see WKHS quickly. 1925 for an entry. Now 1925 is a little bit late. If you took it for an entry somewhere right here on a new 5 minute high, I would like it more. Why is that? It's ascending right here, right? You see that the range is getting tighter and tighter and tighter. This is the tight range right here. It either breaks up and it works out, or it's making a new 5 minute low and it may be going to the previous pivot point. So an entry on a new 5 minute high would have been good. 1925 is just a little bit late. This is a little bit of chase, and don't go long on a third consecutive green candle right there. So yeah, that's it guys. If you have any questions, just feel free to email me. If you have some trades which you don't feel that you want to post right here, though I really encourage you posting your winning trades and your losing trades. We'll learn from the losing trades, and trust me, no matter how bad you think the trade is, we've all been there and we've done worse than that. So yeah, have a good day everyone. I'll talk to you in the chat room. Let me check quickly on YouTube. What did we have there? What? Hello Ayman, I was wondering with a 30k account and being at your level, how much someone should expect to get per day? Sniper, it's different from one to another. You could have a big account, $30,000 account, and make maybe $100, $200 a day, and you could have a $5,000 account and make $100 or $150 a day, right? It's depending on your risk tolerance. When we're trading, we want to make at least 2 hours, at least double of what we're risking. If you are risking $100 per trade, you want to aim at least to make $200 per trade, at least. Just to be consistent. I mean, you can make $100 after risking $100, but I don't really recommend that because you will need to have at least 51 to 55% win rate to make money. If you are risking the same amount you are making. If you are making double of what you are risking, you need only 35% to get profitable. Now with a $30,000 account, if you are risking, let's say $300, 300 is a little bit too much, I believe. Let's say you are risking $150 per trade. You could aim to get at least per trade, not per day, per trade at least $300, and you could make maybe 4 hours, which is $600 per trade. If you are making multiple trades per day, loser winner, you could make above $1,000, $2,000 a day. So it's all about your risk tolerance. How much are you willing to risk to make money? You could be experienced, but you could be at the same time afraid of losing money, and that's why we're not risking a lot. I always recommend starting small, risk small amount of money. I started risking $5 per trade, and then once you're getting consistent, once you are growing your account slowly, once you're getting the experience, you could simply increase your risk. Second week $7 per trade, second week $10 per trade, after that $15 maybe per trade, 18, 25, 30, 50. Just increase your risk slowly. Don't aim to make thousands of dollars per day. Perfect. So have a good day guys. Here I'm typing my email. If you are having any questions, feel free to email me and I'll be happy to help you guys. Bye bye.